Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Friday to you guys. It's January 5th here. We got the big day today, the jobs day today from the Bureau of Labor Statistics, or BLS. We'll jump right into it. We'll start off with the corridors for the month of December. So, previous month in November, it was revised from 228 to 252. So that one went higher. Forecast for December was supposed to be around 195. And it came in kind of disappointing at 148 here. So obviously, people are a little disappointed by it. We'll kind of touch on that here in a minute here. Unemployment, it was 4.1 and it stayed pretty much across the board. Came in expectation at 4.1%, so still very low. Another good news here is average hourly earnings. We had only 0.1% growth in November, but forecast for December was at 0.3%, and it grew. It came up at 3.3%. So if we could see this kind of trend at 0.3% growing, we could have a nice little. This might help with our inflation issue, and of course, people are making more money. People, I don't know about you, but I think we all like to make more money and be able to provide more for our families. Um, we also got ISM non-manufacturing. This is the services industry. Anything about 50 is talking about kind of expanding. And we had a 57.4 for the month of November, and it was supposed to go up to 57.7, and it dipped 55.9. And last but not least, we got factory orders for the month of November. So October went up 0.4%. November is supposed to go up 1.1%, and it came in just a little bit higher at 1.3%. So overall, mixed bag of news, but fairly good. Now to touch on the non-farm payrolls, this is actually not as bad as maybe it seems because obviously we had a revision to a higher number in month of November. But what's something that's not on here is the U6 number came in. It dropped from December 2016 at 9.1, dropped 1% to 8.1 for the month of December 2017. So that's kind of a better overall number as to kind of gauge as to where the jobs are when you look at all the variables in there than this 4.1 that we see, which can be a little skewed. Um, but overall, it's not that bad here. And then, of course, average hourly earnings, that's a good sign showing that people are maybe increasing it, and that might help out our inflation issues that we've been kind of facing. So we want to see people making more money as well. So right now, of course, stock market is up. We don't got a whole lot of headlines. It's taking most of the information from the data we received today. It does have some corporations are looking pretty good, so it's also taking cue for corporations doing quite well. High tech's been kind of the news of late, and a few other miscellaneous ones in there, but they seem to be kind of been taking the lead so far of late. So let's go ahead and take a look here at the bond market, see how we're doing. When we had some of the good news, of course, it kind of dropped. So initially, it wasn't too bad. We started off the day here. We even went upwards, testing the 25 and 50-day moving average. But since we've kind of just pulled backwards, as the stock market started taking off a little bit more, as we'll see, yields went up a little bit further. The bond market just kind of came back a little bit further. So as you can see, yields went up. They're up about 2 points. So we're up about 1 to 2 points. So right now we're about 2.47 right now in the 10-year Treasury, which is pushing rates a little bit higher here. That pretty much wraps it up today. If you guys want to get more data, just come over to Twitter. I'll be adding more data throughout the day on Twitter. You can find it over there. Just go over my handle at Mike Bjork. And otherwise, I hope you guys enjoy your weekend and look forward to see you guys on Monday. Thanks again for watching. Bye-bye.